You're listening to the Financial Source podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome back to the Deep Dive. I'm so glad you could join us today. We're really going to try and unpack these global forces because, wow, the global stage is just humming with activity, isn't it?
It really is.
Our mission, as always, is to cut through all that noise, the headlines, and pull out the most important insights, the non-obvious stuff from the past week. Markets, trade, geopolitics.
Yeah.
And this week, let me tell you, it really feels like a clear shift. A definite inflection point in political and trade risk that you probably shouldn't miss.
And what stands out, I think, is just how interconnected everything is. It's fascinating. You see these things that seem separate, a currency moving over here, a trade talk stalling there, a conflict somewhere else, but they're not isolated. They ripple through the whole system.
Right.
So our goal is really to help you get those key nuggets and maybe more importantly, the so what behind them. Understand those currents without feeling totally overwhelmed.
Exactly. Let's jump right in.
Okay.
Let's start with global finance, so shifting sands. The U.S. dollar, for instance.
Yeah.
It's been softer, right? After that weak U.S. jobs report on Friday.
Led markets to fully price in that September Fed rate cut.
Which is big news on its own. But then President Trump's move on the Fed chair nomination.
That was something.
Naming Christopher Waller, Kevin Warsh, Kevin Hassett as finalists. This isn't just talk about influence.
No, it's more than that.
It feels like it signals a potential shift maybe towards a more politically aligned Fed. So how much does this really threaten that perception of independence? What are the immediate ripples for sentiment?
Well, that's a key point, isn't it? It raises this really important question. If investors start thinking future decisions might prioritize, let's say, political convenience over pure economics,
right,
that could fundamentally change confidence in the Fed's autonomy. It could alter the whole calculation of how markets read signals, how they set expectations. It goes way beyond just pricing in rate cuts. It's potentially a huge shift from that long-held tradition of Fed independence.
And that connection, that idea, is exactly why what's happening in Europe is so relevant, too.
Yeah.
The ripples go far beyond the U.S.
Definitely.
So looking at Europe, the euro actually held some modest gains. But there's this significant political risk looming.
Yeah, the French confidence vote.
Right. Widely expected to topple Prime Minister Bayrou's government. That feels like a big blow, potentially paralyzing reforms, deepening uncertainty across the Eurozone.
Especially for those key French-German initiatives. And, what we're seeing in France is just a vivid example of how that kind of anticipated instability in a major economy can hit currency values, sure, but also broader market sentiment. It casts a shadow over the country's ability to make policy, affects its standing in the EU globally. Investors just don't like uncertainty.
And a government falling creates a lot of it. Meanwhile, sterling, the pound,
hovering near 1.35.
Yeah, and desks are still flagging some lingering vulnerability there, especially through gilts, the UK government bonds. Even though that recent bond sell-off eased a bit.
Still feels a bit fragile there.
And this ripple effect, this political instability factor. It's not just Europe, is it? We saw similar dynamics in Asia. Tokyo's politics hitting currency markets directly.
The Japanese yen weakened back above 148. That got attention.
And triggered directly by Prime Minister Ishiba's resignation as LDP president.
Yeah.
And his call for that emergency party leadership election. Ishiba, he was often seen as a moderate.
Right. Yeah, relatively. And if we zoom out a bit, traders are basically reading Ishiba's resignation as something that could potentially delay further Bank of Japan normalization.
Even with that upward revision to Q2 GDP.
Exactly. It just highlights that critical link, Political leadership changes can easily shift the expected path for monetary policy, even if the economic data points another way.
It's a reminder that even the best central bank plans can get knocked sideways by domestic politics.
It's always a factor.
And quickly, the antebedian currencies, Aussie, Kiwi dollar.
They steadied a bit during European hours. Got some help from firmer base metals.
Though there was still some caution, maybe. after those softer Chinese trade figures earlier.
Yeah, a bit. And it's also worth noting the PBoC, China's central bank, they put out a stronger than expected fix near 7.1030 against the dollar.
Okay, so what does that signal?
Well, it pretty clearly signals their ongoing preference for stability in the currency, probably trying to prevent more depreciation, keep confidence up, especially with those softer trade numbers. It's a deliberate move, projecting control.
Okay, so while these currencies are reflecting all this, let's turn to commodities, the physical assets underpinning things.
Sure.
Crude oil got some support this week. Fresh OPEC plus guidance, ongoing geopolitical tension. We got the details on that OPEC plus decision. 8 core members lifting October output by 137,000 barrels per day.
So continuing that gradual unwind of the earlier cuts?
Right, they're citing steady global demand, healthy fundamentals. Russia chimed in too, saying compliance is high, markets balanced.
But what's fascinating here, I think, isn't just the immediate supply-demand numbers. It's how individual countries are positioning themselves, securing their energy futures. Yeah. Iraq moving to deepen ties with Oman on storage and trading, signaling talks with ExxonMobil on major projects. That's one approach.
Oh.
Then you contrast that with, say, Italy. Their energy minister is kind of downplaying near-term coal retirements, noting they've got comfortable gas storage, competitive offers for U.S. LNG.
So different strategies playing out.
Completely different. Iraq's locking in long-term deals. Italy's more focused on near-term pragmatism. It really underscores this global energy divergence. It's not just about securing supply anymore. It's strategic positioning, thinking about security, alliances, the green transition. It's all linked. Could create new fault lines, too.
Interesting. And while oil was doing that, gold extended its advance, set fresh highs.
Yeah, it did. Again, partly off that soft U.S. labor data reinforcing the rate cut expectations.
So is it just about rate cuts for gold? What else is going on?
Well, it's definitely more than just rates. Central bank demand is still a huge tailwind.
Right.
We saw the PBoC, China's central bank, adding to its reserves again, 10th straight month. It just powerfully underscores gold's role, doesn't it, as a strategic reserve asset, especially when things feel uncertain economically or geopolitically. In a world where currencies face all these pressures, gold is tangible. And central banks are clearly signaling they want to diversify, fortify their holdings against exactly these kinds of uncertainties.
Makes sense. Even copper, you mentioned.
Yeah.
Trying to recover, but capped by China's weaker trade data.
Yeah, that really shows that direct link between trade numbers and industrial metals. It's a pretty clear indicator, right?
It really is. Copper is often called Dr. Copper for a reason, I guess.
Absolutely. Because it's used everywhere, manufacturing, construction. So when China, a massive consumer, reports weaker trade,
it signals potentially slower industrial activity.
Exactly. Directly hitting demand for stuff like copper. It's a very literal picture of global supply chains.
Okay, let's turn now to global trade and tariffs.
Yeah.
Friction's definitely intensified there this past week. U.S.-China talks reportedly made very little progress.
Yeah, not much movement. And a specific sticking point over fentanyl.
Right. Even though senior Chinese negotiator Li Changgang actually traveled to Washington to keep channels open.
Which raises the question, doesn't it? How does one single issue, even a critical one like fentanyl, create such a huge bottleneck in the broader trade talks?
Yeah. What does that signify?
Well, it suggests it's not just a trade dispute anymore. It's become like a litmus test for trust and cooperation. It shows how an issue with these profound social health implications can almost weaponize the broader trade relationship, reflects that deeper mistrust that's blocking progress elsewhere.
And it wasn't just U.S.-China. U.S.-Japan front, too.
Right.
The White House moved to structure Japan's big investment package, what was it, $550 billion under this new bilateral trade framework. Confirmed a presidential order on lower auto tariffs.
Okay.
But Tokyo's negotiators said that most favored nation treatment for pharma and semiconductors still unresolved. Surprisingly.
And what's really fascinating there is specific detail. The U.S. is thinking about annual China chip supply permits for Samsung and SK Hynix.
Requiring them to detail their yearly needs.
Exactly. This isn't just tariffs anymore. Think about the strategic implications of that kind of granular control over critical tech supply chains.
Wow.
It signals the U.S. moving towards a really selective industrial policy, trying to protect its own high-tech sectors, maybe reshape global semiconductor production to rely less on, adversarial nations.
Okay, and over in Europe, Brussels was weighing more Russia sanctions?
targeting banks and oil trade specifically. And separately, you had the European Council president saying the EU and Washington had, quote, turned the page on their rocky relationship, signaling renewed alignment.
Right.
But a key takeaway here is the detail in a new U.S. executive order. It exempted certain minerals, graphite, tungsten, uranium, gold bullion from tariffs.
Okay, exempted those.
Right. But at the same time, it added silicone and some pharmaceuticals and chemicals to the tariff list.
So very targeted.
Extremely targeted. It's not just about trade numbers. It's a strategic chess move, exempting things like uranium and tungsten. That looks like securing critical supplies for defense, for energy, adding things like silicone. Maybe that's about nurturing specific domestic manufacturing. It draws a really clear line in that strategic industrial competition.
Okay, so to really understand this week, we have to talk geopolitics.
Yeah.
That really set the tone, didn't it?
It really did, across multiple regions.
Let's go back to Japan for a second. Ishiba's resignation, that accelerated LDP leadership timetable, party figures prepping for an October 4 vote. This political reset, like we discussed, injecting uncertainty, including for the Bank of Japan's normalization pace. It really is like watching dominoes fall, isn't it?
It feels like that sometimes.
Yeah.
One political shift in Tokyo sends tremors through central bank thinking globally.
Okay, shifting to the Middle East. Washington warning Hamas. Hostages for ceasefire deal is at last call.
Stark language.
And Israel reiterating the war could end if captives are released and Hamas disarms. Meanwhile, Yemen's Houthis claimed a drone strike on Israel's Ramon airport.
Though operations apparently resumed afterwards.
Right. And Israeli officials signaled expanded military operations around Gaza City.
And placing this in the broader context, you've got the Iran file still simmering. Officials called IAEA talks positive, but ultimately inconclusive. The IAEA chief reported some progress towards restoring full inspections.
So slow progress, delicate.
Exactly. It shows that ongoing, complex, delicate nature of those talks. Small steps, maybe, but the big resolutions are still elusive. It's this long dance that remains just critical for regional stability and, by extension, global energy security.
Okay. And then the Russia-Ukraine war. Kyiv reported the government's main building damaged for the first time, a large overnight barrage.
Yeah, significant
Moscow's response said it struck Ukrainian military, industrial, transport infrastructure. Claimed gains at Kharkiv.
And the international response is also key here. Washington and Brussels actively preparing to discuss a new sanctions package.
Right. The European Commission president signaling a 19th round, coordinating closely with the U.S.
That continuous pressure is definitely part of the strategy. But, what's interesting here are the kind of mixed signals, maybe.
How so?
Well, you have these preparations for more sanctions happening alongside President Trump's statements that a second round of Russia sanctions is ready, but also reiterating the war will be settled.
Right. U.S. envoys cautioned those recent Russian strikes don't suggest a diplomatic turn, though.
Exactly. So you have these conflicting messages, more pressure coming, but also talk of it being settled. It creates significant uncertainty about what comes next, diplomatically, militarily, makes it very hard to predict. Highlights that challenge when different actors send different signals.
And finally, just quickly, regional tensions flared in Turkey, too. Police blocking access to the opposition's Istanbul HQ after a court-ordered leadership change.
Yeah, just a stark reminder of political fragility, even on Europe's edges, and how quickly domestic politics can become wider concerns about democratic processes.
So, okay, let's try and bring all these threads together. What does it all mean? It really just emphasizes how deeply intertwined everything is, doesn't it?
Yeah.
A single Fed rate cut prediction ripples through gold prices.
Yep.
A PM resigning in Japan delays central bank policy, impacting global markets.
Right.
A pipeline strike in Ukraine echoes across energy markets, international diplomacy. These aren't separate stories.
Not at all. They're all part of this complex web, like you said, a global chess game where every move affects multiple pieces.
Yeah?
And this raises, I think, an important question for you, our listener. In a world just saturated with information, how do you actually discern these critical connections? How do you understand the underlying currents shaping things?
That's the challenge.
It is. The sheer pace, the interconnectedness. It means we constantly have to reassess, question our assumptions, think critically about the why behind the headlines, go beyond just what happened to grasp its real significance, its potential ripple effects.
Absolutely.
Yeah.
And as we wrap up this deep dive, there are definitely a few key things you should keep watching closely.
Okay.
That French confidence vote for sure. The evolving OPEC plus implementation path for oil. Upcoming U.S. inflation prints later this week, always important.
Critical data point.
And, of course, that LDP leadership timetable in Tokyo. Those are all pretty critical indicators for the next few days and weeks.
Yeah.
Likely to define market direction.
And maybe a final provocative thought to leave you with. Given these significant shifts in political and trade risk we've talked about today, just consider how readily geopolitical events can reshuffle market expectations, sometimes overnight. What unforeseen consequences might pop up from this really intricate dance between policy, trade, and conflict? And how does this deep dive shape your perspective on global stability going forward? It's definitely a world that demands constant reevaluation.
Powerful questions. Definitely food for thought. Well, thank you for joining us on this deep dive into this complex web of global events.
Thanks for listening.
We really hope this exploration helps you make sense of it all, gives you those valuable distilled insights. Keep learning, keep exploring, and we'll see you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.